Hello and welcome. You tune into Your Trades with me, Ankita Saxena. Well, this is the show where we get you the roundup of today's trading session and how the markets panned out. Well, first up on the Nifty, it was a day of consolidation. We ended the day with a negative bias. We were very flat by the time we ended the day. We closed below the previous session's closing number. We closed at 22,470 is where we were perched at. But nonetheless, we managed to recover 100 odd points from the day's 130 odd points from the day's low on the Nifty. But nonetheless, the Nifty closed below the previous session's range, so not much action coming in as far as Nifty is concerned. But the action was in Nifty Bank today, because after the blowout that we saw yesterday on Nifty Bank, especially after that IndusInd Bank carnage of almost 27% on IndusInd Bank, Nifty Bank was reeling under pressure yesterday. After that underperformance came the day of recovery for Nifty Bank. Nifty Bank was trading with gains of almost 200 plus points. So Nifty Bank, managed to recover quite a bit from yesterday's blowout. But let's look at the sectors also. Nifty IT was reeling under heavy selling pressure. In fact, it was down almost 3% in trade. It hit its 8-month low, and this on the back of the fact that the US markets are not doing very well right now, especially the Nasdaq. The pressure is coming from the looming threat of a recession in the US economy, and therefore the IT stocks are facing the brunt of that. And Indian IT also under pressure since yesterday. In fact, this is the second consecutive session where Nifty IT is under pressure. But besides that, we also had Bharti Airtel and Jio and Reliance that was in focus today on the back of their partnership to bring in a SpaceX internet connection in India. On the back of that, Bharti Airtel, Jio was in focus today. We also had Tata Motors that was soaring away in trade today. In fact, Tata Motors, there was some strong set of commentary that came in from the management. Management is eyeing almost 8.5% EBIT margin for their JLR business. On the back of that, Tata Motors was up. In fact, it was up almost good 2% in the last half, in the second half. In fact, it closed up 3%, as of today. Also, we had the SIP data that trickled in today, and we had the SIP inflow slumped to a 3-month low in the month of February. Now, the weakness in the market has started to show in the SIPs number as well. That showed a slump of almost 3-month low in the month of February. And also, of course, today is the day where Trump's metal tariffs are coming into effect. Now, Trump has already imposed 25% tariff on all steel and aluminium imports. That is going to go into effect from today. So that's the top news, really. And besides that, we had a couple of other names that were in focus today that were buzzing in trade. Let's take a look at some of those names also. Then we had RIL, of course, today. We had Godrej Agrovet that was in focus today on the back of the fact that they are acquiring the remaining 48% stake in the Creamline dairy products. So that was in focus today. CG Power was in focus on the back of securing an order that is worth almost 400 to 450 odd crores. We had RVNL again on the back of an order worth 500 odd crores. Also, we had Swiggy that had Jeffrey's initiation of a hold with a target price of 400 rupees. On the back of that, Swiggy was also in focus today. So these were largely the counters that were in focus today. A day of consolidation, I would say, is what we saw in today's trading session. But to tell you how the markets are likely to shape up in short term, we are now joined by Amar Singh, Senior Vice President Research, Angel One, who's joining us now. Hi, thank you so much, Amar, for joining us.
Yeah, thank you for having me on the show.
Amar, as far as Nifty is concerned, we are facing resistance on the 22,600 levels from the last 4 to 5 sessions. Around those levels is where the Nifty's resistance is. Tomorrow is the weekly expiry, and we are in a truncated week. What are the levels that you're watching out for Nifty? Are we likely to break out from the 22,600 levels? Also, on the Nifty Bank, we saw a good reversal coming in today. What are the levels that you're watching out for as far as Nifty Bank is concerned?
Yeah, so talking first about Nifty, we definitely seeing some very strong support coming for Nifty at lower levels, and Nifty is trying to sustain. But what if we go back and see? So earlier of the last 3 weeks in consecutive, if we look at, so today's or this week's high so far is 22,676, and earlier, if I go back and look at the last of February high, that was around 22,668. So anywhere between 22,650, 700, that's going to act as a very crucial zone of resistance for Nifty, what we are seeing for the last 3 consecutive weeks. Because Prior to that also, if we go back, so that's from where Nifty had taken support and then had bounced back. So, so what it effectively would mean is that higher levels will be sold into and lower levels are definitely being supported for Nifty. So short-term support, I would say 22,300 is an important support. And so the range would be support range would be 22,250 to 300. That's very crucial, very important support zone. Upside around 22,650, 700. If you ask me what one needs to do, any pullback is a buying opportunity. Higher levels, you should look at booking profits because on the intermediate term, that's a very strong zone of resistance. Now looking at Bank Nifty in particular, Bank Nifty, if we see, Bank Nifty has bounced back over the last few trading sessions, but it still continues to trade lower. So as far as Bank Nifty is concerned, I would say 47,700. That's going to act as a very crucial support zone, whereas on the upside, immediate resistance is somewhere around 48,400 levels. So it is this range that one should look at. So I would say any pullback towards lower levels can be a buying opportunity, but the stop loss needs to be below 47,700 with an upside potential towards 48,300, 48,400. Because till the time we don't see it sustaining above 48,400 levels, we could witness some consolidation. Above 48,400, we could witness a 400, 500 point rally in Bank Nifty.
All right, Amar, thank you for those levels. We will be watching out for that. But tell us, amid this volatile market, are there any buy calls that you're seeing, any pockets of value? What is your top bet?
So I have been positive on the, I would say, the FMCG space, and in particular, Dabur is also looking good because we've seen this stock crack significantly. This is a stock which has cracked from almost 670 levels to currently trade around 500 odd levels. So the stock seems to have formed a bottom, and it could be a opportunity for an upside move of anywhere between 5 to 10% on the upside. So current levels around 499, 500 levels. So one can look at buying around these levels with a target of short-term target of 535 on the upside and a stop loss of 479. And the second stock to look at is Crompton Greaves. So this is one stock. If I look at on the weekly charts, we've seen the stock correct, and then almost there was a 40% correction in the stock, and the stock seems to have picked up steam and it's gaining strength. Over the last few trading days, we've seen the stock pull up from almost 300, 330 levels to currently trade around 360 odd levels. So this is one stock one can look at from a short-term perspective with an upside target of 397 and a stop loss of 337 on the downside. Because what we are seeing is that the trend has definitely changed from a short-term perspective, and the intermediate term trend, we are seeing some sharp pullback. So with the stock could witness, but one needs to remember that all these positions, if one makes decent profit, one should look at booking as well, because the intermediate term structure for most of the stocks and the indices continue to be quite, I would say, negative.
Top bets, Dabur and Crompton Greaves. Thank you so much. On that note, Tamar, we will have to let you go. But thank you so much for taking the time out and joining us. Let's move on to the word coming in from the wise. Harsha Upadhyay, who's the CIO of Equity Kotak AMC, discusses how he expects the Nifty to perform going forward. He also believes that small and mid-cap valuations remain rather lofty even after the correction. Let's go across and listen into his take.
Very short term, clearly markets are oversold. However, if you look at the valuations from a historical perspective, only the large cap segment at this point of time seems to be at fair valuations. The mid and small cap basket is still at a premium to historical valuations. So to that extent, while we may see some stabilization in the short term, the eventual moves would be dependent on how the earnings recovery happens and also where we finally settle on valuations. If somebody is a long-term investor in large caps, I think the current valuation is something where they will not really see too much of valuation risk going forward. But same cannot be said on mid and small caps yet. Earnings especially. The expectation at the beginning of financial year 25 was mid and small caps would grow at 25% plus kind of earnings CAGR, whereas large caps were showing somewhere in the mid-teens. right? Now, both the baskets have started to decelerate in terms of the earnings growth. It's very, very muted earnings for large caps. And there are several small caps, and the index as well has shown degrowth in earnings. And the prognosis for next couple of quarters is also not very strong. So given all of this, I believe the current valuations on mid and small cap, despite the correction that we have seen from the peak, is still at a high level.
All right, that was a word coming in from the wise, but let's take stock of how the derivative diary is shaping up for 13 March expiry, which is tomorrow. Remember, it's a truncated week, and tomorrow is the weekly expiry, 13th of March. That is, we have a little bit of a mild short build up as far as Nifty is concerned, which shows a rather bearish trend happening. But for the bank Nifty, we see a long build up, which means there's some recovery or some bit of a positivity that is back as far as the bank Nifty is concerned, especially after today's recovery. Let's look at the active calls then. Active call of the first call writing is on 22,500 level, and the second call writing is happening on 22,600 levels. But as far as the active puts are concerned, put writing, the first level is 22,400 and the second level for put writing is 22,300 for the Nifty. So that's how largely the derivative diary looks like for 13th of March expiry. But we'll move on from that to the massive sell-off that we're seeing in D Street. Let's take a look at how the mutual funds have bought and sold in the month of February. My colleague Sharad is also joining in. We also had the SIP data that trickled in today. But first up, let's go across to Sharad and figure out what the mutual funds bought and sold.
If you look at the large cap companies which have been in focus, where the important buys have happened, this includes HDFC Bank, Hexaware Tech and TCS as well from the IT pack. But significant reductions coming in when it comes to IndusInd Bank, and we have seen the stock has been on a fall over the last 2 to 3 trading sessions as well. Interglobe Aviation also we saw reductions happening, and also making it to the list is Bajaj Finance as well. Apart from this, if you look at the mid-cap space, which are the important additions happening, we are having KEI Industries, wire and cable, and the consumer durable segment. That seems very a hot thing when it comes to the mutual funds, KEI Industries, Crompton Greaves, and even from the pharma space, Glenmark Pharma makes it to the list of additions across the top 20 mutual fund houses. Now, reductions coming in from, of course, the newly listed company after the demerger, which is ITC's hotel business. There has been a reduction there. Apart from this, we are also having Manappuram Finance making it to the list, while CDSL, that stock also has been on a downward basis, especially with the NSDL IPO coming up also in the month of May, and that's a reduction we are seeing in CDSL as well. Large cap and mid cap activities we already spoke about, but the small cap also, if you look at it, there have been additions coming in Teamly Services, Ajax Engineering, a largely unknown name in the small cap space, and Welspun Enterprises as well. Reductions include PVR Inox as well as Canfin Homes, and recently PVR Inox had a negative news flow as well in Karnataka, capping in 200 rupees per ticket for the multiplexes as well. And from Aarti Group, Aarti Pharma, that where we saw the reductions happening as well. So these are the important stocks as per the Nuvama, where the important additions and reductions have happened for the month of February.
All right, that's the data coming in on mutual funds, but we also had the SIPS data that trickled in today for the month of February, and as far as monthly SIP inflow is concerned into mutual funds, that fell to a 3-month low of 25,999 crore rupees in the month of February as market sell-off intensified. That's what the AMFI data showed. Now, DP Singh, who's the Deputy MD SBI Mutual Fund, says that a downtick in equity inflows may be positive. Let's go across and listen in to what his take is.
We are saying that this month, because that 29th, 30th, 31st SAP numbers will come into the month of March. So we hope to have a better number in the month of March. So whatever lower numbers are there is majority because of the lesser number of days. But of course, the sentiments in the market were little on the lower side, and when people are looking at the slide in the markets, so it's a natural thing that in such a scenario, the new registration become little lower. As a mutual fund industry, we may be concerned that the equity flows are less. But honestly speaking, I'm very happy with the lesser equity inflows.
All right, moving on then, let's take a look at all the stocks that were in focus today. A couple of names like Godrej Agrovet, CG Power, RVNL on the back of order wins, Zydus Life Sciences, Swiggy. These were the stocks that were buzzing in trade. But to get you more on why these stocks were in focus today, I'm now joined by my colleague Rabinder. Rabinder, take it away.
Godrej Agrovet is in focus, where board has approved to acquire the remaining 48.06% stake in Creamline Dairy Products Limited for rupees 930 crore, making it a wholly owned subsidiary of the company. And with this, the remaining acquisition of by Godrej Agrovet, company will hold now 100% stake in Creamline Dairy Product. Moving to next, CG Power were also in focus, where CG Power secures an order for supply and servicing of railway products towards manufacturing of Vande Bharat train set, and as a part of this agreement, the first purchase order ranging between 400 crore to 450 crore has been secured by the company for the supply of railway product for 10 Vande Bharat train set. Moving to next, RVNL were also in focus, where company has emerged as the lowest bidder from National Highway Authority of India for construction of 6-lane across control connectivity to Visakhapatnam Port Road under HAM model, and with the total bid value of rupees 554 crore, and the order to be completed within 730 days. Apart from this, Zydus Life Sciences were also in focus, where company has received final approval from US FDA to manufacture methamine tablets. And lastly, Swiggy were also in focus, where Jefferies has initiated a coverage on Swiggy with hold rating and target price of rupees 400, where they say that Swiggy is a top internet based company in India, and Swiggy hold a 45% market share in food delivery, which is expected to grow in the high teen over the next few years, along with a better profit margin. This is that the Q-commerce has a huge growth potential but faces tough competition. Due to this, profitability will remain under pressure, and as a result of this, EBITDA and free cash flow are expected to stay negative between FY25 to 27.
All right, well, these were the counters that were in focus today. One pack that was really taking it on the chin was Nifty IT, that continued to remain under selling pressure amid trade tariffs and growing concerns over US's growth. And what else is really denting the tech index, and what are the brokerages penciling in? My colleague Ansh is joining in with the details.
Nifty IT index is down by more than 20% from its 52-week high, and yes, it is a top sector loser today. All constituents of the index are in red. So let's see what are the key triggers. One is US slowdown fears. Now, weak job growth in US and consumer spending has raised recession worries. Second, trade tension. 25% US tariff on Canada, Mexico and China has disrupted the global trade. Third, rising yields. US 10-year yield is near 4.3%, which has shifted focus of investors from equities to bonds. Fourth is tech index. Nasdaq has been declining, and it has been declining from last one consecutive week. If we check in last 1 week, it is down by more than 6%, which is the worst if we compare it with the rest of the world. Now, fifth is geopolitical risk. Conflicts in Middle East, Russia, Ukraine has drove the investors to safe havens like gold. Also, in the meanwhile, we have a report from Morgan Stanley, and they have turned cautious as well on Indian IT sector, flagging downside risk to both revenue growth and valuation multiple. They have also downgraded Infosys to equal weight, which is the top loser in today's IT index as well, while they have preferred TCS.
All right, with that, it's curtains done in this edition of Your Trades. I'll take your leave. Thank you so much for tuning in.